Good morning and welcome to this weekly market update from MRC Markets. There's the 1st of July 2014. What we're going to do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to review what happened last week. We'll have a look at the Forex calendar and give some sort of outlook for this week. We're not making any trade calls recommendations in this video. You do trade at your own risk. If you could please read a full disclaimer which is on our website at www.mrcmarkets.com. That would be most appreciated. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, then let's have a look at the Forex calendar. So we're doing this video on a Tuesday. I've been away for the last few days. So yesterday, quite a bit of data out. But in terms of the high impact stuff, there's a lot of sort of mid impact data, but in terms of the high impact stuff, we had the Eurozone CPI flash estimate year on year that came in slightly weaker than expected. We had Canadian GDP month on month that came in slightly weaker than expected, and then we had the US pending home sales month on month figure, and that was much better than expected. So 1.4% came in at 1.1%, so huge number there. And today, Tuesday, what has already happened? We overnight with the Chinese manufacturing PMI that came in bang on as expected at 51.0. We also had the Chinese, the HSBC final manufacturing PMI number that was came in tad below it, expected at 50.7. Overnight, well, at 5:30 AM with the Australian, with the cash rate, RBA rate statement. Well, the cash rate came in as expected as well, so no change in the interest rate there. In terms of the high impact stuff for the rest of the day, at 9:30 we have UK manufacturing PMI, and at 3 PM from the US with ISM manufacturing PMI, so keep an eye on that. It's a big piece of data. Tomorrow overnight with the Aussie trade balance, 9:30 we have more UK data, so we have the UK construction PMI there. On Wednesday we have the US ADP non-farm employment change figure, so that's expected at 200k, previous 179 there, so keep an eye on that. 200k should be the big sort of benchmark and number there. Thursday I have some more overnight Chinese and Australian stuff as well, so the retail sales for example. At 9:30 more UK data, so got the services PMI this time. At 12:45 with the Eurozone minimum bid rates, that's expected to stay the same at those very new changed lows at 0.15%, so that should be quite volatile, although I would not expect a change on that one. At 1:30 we have quite a bit of data out, so we have the Canadian trade balance, you got the Eurozone, so you got the ECB press conference, and NFP, so that's coming out on Thursday instead of the Friday, because Friday we have a US bank holiday, so keep an eye on that. Very busy week, lots of stuff coming out. I mean, also sorry to forget to finalise the week at the US the ISM non-manufacturing PMI. So we have NFP this week. We have some rate decisions coming out, although there will be. I thought they'll be expected to stay the same, but still, it should be quite an interesting week. Definitely, there's a lot of UK stuff out as well, so keep an eye on cable. Okay, and so yeah, I've been away from since last Wednesday, so haven't been looking at the charts much. I've got nice clean charts up on each of these, so I can just purely go through what I see, purely in terms of the technicals here, give some sort of nice weekly outlook. And I mean, we will go through all the time frames here, so nice and fresh. And just I think it's the best way to look at the charts. To be honest, keep it nice and not too much on your charts, and just whatever pops out at the eye tends to be the best sort of setups, to be honest with you. So here we have the euro dollar on the weekly. What have we been speaking about on this weekly chart? We had these smaller fibs, remember, but this move here was the one to keep an eye out for. But I think this one came off the 38.2, remember, so let's double check on that one. There we are. That's the 13.2, so I'm just going to draw the level up as well so you can see the price. This is a nice little trick here for MT4. So the 38.2 is what we're holding up here, and this fib is from the low of 2013 to the high of 2014. So that 38.2 comes at one spot 35.17. So in terms of last week weekly candle, a nice sort of standard bullish candle really, and interestingly we're back above this 50-week moving average. So it looks like we could get a nice interesting pop up here. We have a nice sort of base there. 3 weekly candles tested that 38.2. We've got some nice closes above. We've finally got a close above the 50-week moving average here. So it does look quite bullish in terms of this weekly. It looks like we could just keep on grinding higher and higher. I mean, the reason I don't massively use the 30.2 is because it doesn't hold as well. So I'm just going to take it off now, and also it keeps it nice and simple for the videos. But in terms of the fibs, what else? In terms of this weekly chart, the other fib to keep in mind, in my opinion, in terms of the other side of the coin, is that one there. So this is the fib from the high of 2014 to the low of 2014. That 50% comes in at one spot 37.47. So it does line up nicely with the round number being 137.50. So keep an eye on that. I mean, we're not too far away now. We're pretty much about 60 pips off of that, and it does look like it wants to grind towards that. So I'm now going to flip it towards the lower time frames. Now that's the weekly done. The same thing here on the daily chart. In terms of the fibs, so that's the move to keep an eye out for there. Lovely downtrend, nice sort of retracement now, slowly grinding higher. Where it's starting to catch some momentum now, and interestingly we have a close above this 200-day moving average here. So it looks like this week we'll get grind up towards this 100-day moving average and this 50%. So do keep an eye on that if we do get there. And that's pretty much it. And to be honest with you, I mean, unless the only other thing I keep an eye out for is if we get any sort of small retracement now, that'll be a fib to keep an eye out for, I think. So you can see that there. That's the sort of the lows of the low of June to the highs that we're at now, and that sort of coincides nicely with this 4-hour chart. So that's pretty much the high of the 4-hour chart to the low of the 4-hour chart to the high of the 4-hour. And interestingly, we have some nice sort of confluence there. Well, previous support at the 61.8 and the 50% as well. Interestingly, last week I just had a quick review of the charts, and we were speaking about these ones before. So this was the first move here. Remember, lovely, nice bounce off the 50%. And if you extended your high to that one there, then pure right off the 50% there to the pip. Lovely. So if you went down to the shorter term time frames, there was some lovely 15-minute reversals there. So it's all, if we do get any sort of retracement, it's all about just extending that high to there. And you can see that nice and clear on the daily chart as well. Okay, let's look at cable. Cable's still in grind higher mode. It really is just ripping higher. I'm just going to flip it here to the monthly here in terms of some context. Interestingly, we're above the 100-month moving average here, and last month's monthly candle was extremely bullish. So do keep in mind that. In fact, interesting. I'm just going to flip it to the euro here, just to have a look at what the monthly candle was, because we didn't have a look at it. And very, very interestingly, surprise, surprise, look at that, a lovely monthly bullish reversal here off of this 100-month moving average. And interesting, remember we spoke about it a while ago. We're looking at this fib here. So that's the high of 2008 towards the low of 2010. And we did have a nice reversal. The previous month's candle was a nice reversal of the 50%. But you can already see this 100-month moving averages acts as fantastic support. So that even sort of coincides with sort of bullish momentum here. But so don't be surprised to see it hold that smaller daily. Well, of course, this is a very long time frame, but the bigger charts do tend to be stronger. So in terms of a monthly bias, I'd say it's definitely towards the upside. So do keep that in mind. But anyway, let's flip it back to cable. So similar to euro, lovely bullish candle last month. But in terms of fibs, this one, it looks like it wants to grind higher towards its 50 percent retracement. That coincides with the 173 handle. So about 200 pips away from that, but of course we can get there very quick, especially if we get a weak NFP number this week. Right, let's flip it to the smaller term time frame. So in terms of this weekly, it's just ripping high. I mean, in terms of sort of key levels, we're above the highs of 2007. So that's the high there. You can see. Oh, sorry, what's going on there? Sorry, no, we're not above that high. What am I talking about? Let's just zoom out here. In terms of sort of key levels in the weekly, nothing major, to be honest with you. I mean, because we've basically broken that high there, you can see. So I'm just going to zoom back in there. So that was the high of 2009, was it? High of 2009, yeah, that's right. So that's the 170.25. So I'll keep 170s on there as well, just in case we get any sort of retracement. It's all about just playing the round numbers, I think. I mean, in terms of the weekly, nothing major of interest, I would say, to be honest with you, because we're above all the big sort of technical resistances. And in terms of this weekly, we did have a close above that 170.25s as well. So I think, to be honest with you, it's all about just sort of buying any sort of dips, really. In terms of the fibs, remember we had this move here. Well, the first move was this one here. Bam, straight off the 61.8, that rotated higher, and then we had this next move here, right off of the 50% retrace there. So if we do get any sort of retracement, it's all about using that low there and then extending the highs. So let's say it tops out here, that's the move there, but it looks like it's going to keep on grinding higher, to be honest with you. In terms of sort of key levels, purely I'm just going to keep an eye on the round numbers here. So we got 171 there, and we have a daily close above. I mean, there's no sort of pure sort of levels to keep an eye for in terms of major resistance. It's all about the sort of major supports here. So that 170 coincides with that lovely high there. That was basically the high of May. Then it's all about just playing the round numbers. So keeping up 170, 150s. If you're looking at sort of scalping for reversals, a lot of people I'd have thought will be looking at that 170, 150 if we do grind higher this week. In terms of shorter term time frames, yeah, it's all about the small sort of moves. If you want to flip it to the 1 hour, and if you're an aggressive buyer here, this would be an interesting fib to keep an eye out for, I'd have thought. So that's just a recent swing low on this 1 hour chart, and the 50% there comes at one spot 70s, 60s. But of course, look at the 1 hour price action here. It's already acting off the 171, so it really is. We're getting some aggressive moves here off cable and a lot of aggressive dip buying. So that's the outlook for cable. On $1 Swiss, what is going on? We're starting to get some sort of retracement here on the weekly. It's sort of getting front run off of that 50-week moving average here. In terms of the fibs, what we're speaking about, so we're looking at the sort of the move there off of the yearly high to the yearly low. It hasn't been acting that technical. It pretty much is off of the 50 SMA, but also keeping in mind it's off of the 0.90 handle. So draw this up here so you can see it clearly. 0.90 key line in the sand here, key resistance. We got held out a couple of weeks ago, and it's just starting to retrace off that. If you look at the counter moves, in fact, I'm going to flip it to the daily so you can just see it a bit clearer. It's a bit too small on the weekly. In terms of the daily chart, that's the fib move to keep an eye out for. I think. I mean, you can perhaps take that low there. That's a bit clearer actually. It's a bit more technical as well. So we actually got a daily close above that. I think it actually closed just below the 100-day moving average there. But that 50% comes at 0.8870s, and that's where we're sort of hovering at the minute. It does look quite heavy though, but don't be surprised to get any sort of short term. And bear in mind we're doing these videos on a weekly basis. If you're day trading, don't be surprised to see any sort of interesting reversals off there and any sort of brief bounce up. And if we do get a brief bounce up, then this will be the fib to keep an eye out for in terms of sort of selling any shorts. I'd have thought a lot of people were looking at that. I'll personally be keeping an eye out on that. And that 50% comes in at 0.8949, which, surprise, surprise, coincides with a lovely round number. So that should act as decent resistance there. And that's the same on the 4-hour chart. You can see that nice and clearly there. And in fact, we're looking at the same thing on the euro as well. What are we speaking about on the euro? Complete mirror image chart, taking the low of the chart to the high of the chart. Surprise, surprise. On dollar Swiss, we're taking the high of the chart to the low of the chart. So complete mirror image there on the dollar Swiss. And that's the view on dollar Swiss. To be honest, you just do the opposite to what the euro is doing. It's really as simple as that. But you've got two interesting fib moves there. But I would have thought we will get some sort of brief retracement. But I mean, well, that previous 4-hour candle does look a bit heavy, so it could keep on grinding lower. But I would not be surprised to see some sort of brief retracement going in over these next couple of days. But it is all about the data, to be honest with you. And any sort of actually aggressive sellers, that's an interesting swing high there. That's nice and valid on the 1-hour chart there as well. So that's the high of the 1-hour chart to the low as well. That 50% comes at 0.8909. So in terms of the round numbers, you've got a lovely round number there, being the 0.89 handle there. Aussie on the weekly, we've finally started to break out of this range. What have we been speaking about for so long? This 200 pip range here at 0.92, 0.92, and then you've got 0.94 here. Bam! Finally got a weekly close above that. So the odds, in my opinion, are a grind towards this 100-week moving average in terms of the daily. We spoke about this fib here that played out very nicely there. We're actually above that, but we haven't had a daily close above that yet. But I'd have thought, no, sorry, we have. What we're talking about, yesterday's daily candle was a daily close above that. So it's just in grind higher mode. I'd have thought, keep an eye on this. So this is previous resistance, should act as new support. I'd have thought that comes at 0.9436. In terms of the shorter term time frames, it is quite. I mean, it is playing dips nicely, and it's making higher lows. You can see here. So we've got nice sort of trend line support there. So for any sort of dip bias, keep an eye on that. But yeah, it is all about playing the dips. In my opinion, one level I'm going to keep an eye out for as well is 0.9450. There, nice round number. You can see we're above that now, so that should act as decent support. If you flip it to the 1 hour, I'll not be surprised to see it come back there and act as nice support. But it's just all about playing the dips. I'd have thought the bias is definitely towards the upside. In fact, let's look at the monthly candle as well. Last month's monthly candle. So I should clean this up. Last month's monthly candle, nice and bullish, and don't forget this lovely fib move here. I mean, it did sort of get a front run, but it's a lovely uptrend, lovely retrace, and we're bouncing off of the 0.87 handle. So it's a lovely bullish move there, and the bias has been towards the upside for some while. That's why we were saying that 200 pip move. Don't be surprised to see a break and close above. I think the odds were for that. So the monthly looks bullish, the weekly looks bullish, the daily looks very bullish. Also keep in mind there, so you can see that high of April, that pretty much comes in at where we're at now. So that's the sort of 0.9450, big level here. Key line in the sand, I think, definitely going into this week. Daily closes will be interesting. If we have a daily close below this, then we could get a brief sort of retracement, and if we do get a retracement, then I'll personally be looking at this fib move here, that smaller move there, that coincides with that previous support there as well. So yeah, that's definitely one to keep an eye out for there. Okay then, let's move on to gold. I haven't done gold yet. Gold, what is going on? Weekly, we have that close above the 50-week moving average, so it looks like it's in grind higher mode in terms of the weekly chart. Daily, what have we been speaking about this fib move here in terms of any sort of key resistance? Surprise, surprise. Well, actually, no, we haven't quite tested it yet. Pardon me. But we have sort of, it's very, very near that, and today's daily candle is already starting to look like a bit of a reversal. So keep an eye on the daily candle close. If we do get any reversal, we could get some significant selling action on gold. You can see that on the 4 hour, it's starting to look a bit toppy. And what level are we looking at here? 1330s. Key resistance there. In terms of the daily, that's the key line in the sand. Definitely, you can see that's the high of April. In terms of the fibs, if you're an aggressive buyer and you think we can go towards the upside, that's the fib move to keep an eye out for, in my opinion. The 50% comes at 1286 is there. In terms of the 4 hour, nothing major of interest, to be honest with you. It's just all about playing the round numbers. I mean, the 1300 handle is definitely one to keep an eye out for there. And the sort of the $10 increments, the ones to keep an eye out for there. Previous support there as well. It's just keeping it nice and simple on gold, really. I don't have any major sort of bias. I mean, I do think in terms of the weekly, it's in grind higher mode. Monthly, previous month candle very bullish. But 4 hour, in terms of going into this week, I wouldn't be surprised to see some sort of retracement down to those sort of 1306s there. In terms of the 1 hour chart, if you're an aggressive bull, then that's a fib move to keep an eye out for there. But nothing major sort of standing out here, so I don't really want to point out any sort of clear moves, because there aren't really ones to look out for, really. And there's no sort of clear bias. It's all about just waiting to see what happens if we get any sort of bounce off of these levels here. Those are the ones to keep an eye out for, I think. But I think there's more interesting stuff on other charts. But hopefully the data will shake up gold a bit, and we should get some interesting setups hopefully for next week. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube video or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading. I'll catch you next Monday. Thanks for watching.